Hey guys, what's up? What's up? What's up? What's happening? So, I want to welcome you guys to this special episode. So, why do I call it a special episode? Because today I would be back testing and doing a market review, and at the same time, I would show you how I back test it into my Notion journal. So, on my Notion, I have a trading journal, a back test journal, a weekly review, daily review, tape reading, whatever. So, this is how is later on I will give you a deeper dive into my Notion trading journal, but for now, or my trading hub, but for now, you're gonna know just about the backtest arena. So this is where I do my market review and backtest mostly on a weekly basis. So every week, I apart from my trading journal, I still go back and do a review of what I could have done better in the markets and what would have happened, the best case scenario, worst case scenario, stuff like that. So today we're going to be talking about that on this date, 24th of November 2025. That is this candle. This is the weekly candle, anyways. But we'll go to the daily time frame and you see. So while we are on the weekly time frame, is I first look at the weekly, the new week opening gap, where we are, where we could gravitate to, etc., etc. So now on the weekly time frame, this is our current new week opening gap. Then this is another one I'm seeing closest proximity. If we were to go higher, you understand? So I've marked that out already. Then we'll go to the daily time frame. And now we can see something different again. This is that same week, new week opening up. This is the current new week opening up. And now this is the sell side liquidity. As you can see, we took out sell side on Friday and gapped higher on Monday. So when we gap higher on Monday, we are going to be looking where is the closest place we can reach in price. And that is the new week opening gap this day of the 20th of October new week opening up. So that is the closest proximity we could reach in price. Okay. So usually I check the dollar index to know how the market is gonna do. But I don't always do that. I don't always do, like this is I don't want this to be long winded. I always say that and then I make a video about 30 to 40 minutes and I don't even want that. I want this video at max 15 minutes. So I don't have control over that, but I hope I can achieve that today. So as I was saying, this is the new week opening up that we are looking for. Okay, can we see if price is going to gravitate towards that? Yeah. So normally what I would do is I would just screenshot this. I do a lot more of annotations. This was when I started that out when I was starting to backtest. Now I don't really need to do so much annotations. I can only do screenshots and I would know what I'm looking for. But and to save time, I'm not gonna do much of an annotation. Can I speak? Much of an annotation today. Yep. So guys, that is that. So that's how I screenshot that. And then normally once I see what I want to see, if I can see enough, I don't really need to go to the 1 hour or 4 hours. I would do that sometimes, but sometimes I don't need to do that. I can get all my information from the weekly, daily, 15 minutes. Then from 15 minutes would determine if I go to the 5 minutes. If not, I could just go straight to the 1 minute and look for an execution or an entry rather, or a setup, whichever one is fine, man. So yeah, so now we're on the 15 minutes time frame. Now we have to go look for our dates. Man, I think there's a better way to do this. Yes, 24th, right? Yeah, beautiful. So now this is our market, our price on this 24th. Now I'm gonna slam this indicator. Okay, let me put this here. So I'm gonna slam this indicator. Now this is more for back testing. I use this indicator for back testing. I still use it for trading sometimes, but mostly for back testing. So this red it delineates the London session for me, 2 2 a.m. to 5 a.m. This is the New York session, New York AM session, 9:30 to 12 o'clock. This middle here is lunch hour. Then from 1:30 to 4 o'clock is the PM session. So that's what I use it for basically. So now, as you can see here on Friday, what happened on Friday? We have this breaker, a low, a high, a lower low, right? This is the breaker. I like how we traded away from here and moved like this and traded into the PM session. We have this new week opening gap. Price closed here on Friday, opened here on Sunday. Then on Monday, we trade below the midnight open, take out sell side liquidity. Doesn't fully close the gap, but doesn't fully close the gap, then that can be bullishness in depends on how you're looking at the markets. Now we have this very tiny sell side liquidity here, very tiny but something. Now ahead of the AM session, we have traded below the midnight open, create a 8:30 open, and we still trade below it. So I do like that. So I'm gonna take this. I'm gonna take like two screenshots from this screen just to make sure things are clear in case when I want to go back. In case of me trying to go back. So now you know why I always increase this because I would use as many as many screenshots as possible because there's so little you can go back with a 1 hour time frame. So by the time I want to review the market again or just study what I have done before in the past, you might be far away from me. So I take enough screenshots as possible. So now I've marked this out, marked this out. So they really there this is another breaker. If you don't know that, this is another breaker. This up close candles. That's a breaker. So this is a low, a high, a lower low. We trade, see, when we trade above it with this candle, we trade above it and we start to go higher. So I like that as well. So I'm just gonna screenshot that. So now remember our target is what? The new week opening up. Okay. So days like this is what I'm gonna do. Oh fuck, I've messed this up. Okay. So this is what I'll do. Targets. So I will know that when I'm coming back in time, I'll know that this is where I'm targeting the new week opening gap. There really is not much. So on a day like this where I didn't have the new week opening gap to target, what I can do is let's take this off. What I can do is now I can do this. I can check the 1 hour time frame to see. I can check the 1 hour time frame to see if there was something else to target. So now this is the 1 hour time frame. This is the new opening up we're trying to target. I'd look at I could target this breaker. So this is a low, a high, a low, a higher high. So this consecutive up close candles are a bearish breaker. So I can target that is what I'm going to use as a target. When I want to frame a setup with it, I need more than this to frame a setup. But just for easy targets, I can use that as an easy target. I can use this gap, the consequent encroachment. Before that, I can use, then I will see that there really is not much to use. So it's just I have this breaker, the gap, and the buy side liquidity above price. These are the things I can use in targeting. This is a balanced price range, but you now have to go lower to see when you close proximities to these areas, is it enough for profit taking? These are the things you have to put into consideration. So, like you see, there wasn't even much here. So, back to our 15 minutes time frame. Man, do I have to always do this? Damn. I'm glad I learned this. It was recently I actually learned how to do this. I'm telling you, and this is like one of the first times I'm literally like implementing it so easily. Like, I guess when you do this long enough, you just get used to some certain things. Okay, guys. So now when we go lower, I'm gonna slap in the macros so you can see something. Okay, let's do that again. Thank God for this. It's easier. So now we are on the 1 minute time frame, and remember, mm, oh, let me slap this on. This is why you need it. So you see, we are almost. Okay, yeah, I was confused for a minute. This is why you it's important to have this stuff here. I was so confused for a minute, telling you. So now I hope y'all ain't lost. So now when we go to the 1 minute time frame after we have checked the 15 minutes, so what did we see on the 15 minutes? We want to see price go higher, right? You see that we've done our business on the lower time frame, taking out sell side and stuff. Now we come below the 8:30 a.m. open one more time as it's midnight, as the 9:30 bell opens, we trade higher. Now this is where the real stuff comes into play. This is a breakaway gap. This is a breakaway gap. This is a breakaway gap. Okay. So on the breakaway gaps, we want to see price. We don't want to see them filled. If at all we want to see them filled, if at all they get filled, we don't want to see price go past the main threshold, or sorry, the consequent encroachment of the breaker. That is going to show that there is large order flow in the market. That just shows order flow. But because of normally we don't want to buy rich premium. We don't want to be buying in a rich premium. We want to buy in a discount price, and we are not so close from the the midnight open. That's the best time to buy. This best time to buy is below the midnight open. The best time to sell is above the midnight open. But in this situation where we are having a bullish bias and it's Monday, normally we don't trade Monday. I don't trade Mondays because the precision is not always so clear, and ICT says don't trade Mondays. So you just gotta believe him, man, because he's the author of this algorithm. Yeah, and the market runs on algorithm, believe me. So as I was saying, we have this breakaway gap, and this is also a gap, but you have to understand this goes by with experience anyways, to understand which gaps you expect to stay open and which gaps you expect to stay closed. In this situation where we have one, two, three, four, five, I would bank on these two and not bank on this. Trust me, this is just experience. I wouldn't really bank on this. And again, you now have to check about risk management. If you want to go long here, where would your stop have to be? Your stop have to be at least here, because now you want, if at all price is going to play on the place, it's going to play on this gap here, and it's going to leave this one on field. That is going to give you order flow. That means you are bullish. So where is the best place to actually buy is here. You want to buy at the touch of here or even here, just in case price fails to reach here. So you want to buy low here, or at least here. And as you can see, price hits that with an institutional order flow entry drill. So high frequency algorithms, they trade on institutional order flow entry drill. I don't think I have this template saved yet. I always forget to save it, man. So let me write that down. This institutional order flow entry drill. Okay, on the right, on the top. So this is where you should buy, or you want to be safer and enter just not to miss the move here. But being very, very honest, this is Monday. If I was on this trade now, I wouldn't be taking this trade yet, because price might as well want to go higher and still come to the midnight open before finally going up, because we have the midnight open, the new week opening up and stuff. But that doesn't mean I'm not reading price. So this is why you have to be good at reading price. So now what I'm gonna do now is I'm gonna wait and say, let's see what we do after this. Now I want to slam in something, but that means I'll have to temporarily take out this, because I can only use two indicators for now. So now, what is this? This is the 950 to 1010 macro. That is why this extra push came here, and we have this push clearing out what? liquidity. The macro is always going to run on liquidity, whichever side the market offers. The macro, the algorithm is meant to run on liquidity. So it runs on this liquidity here, sell stops. It takes out the sell stops and trades higher. Now, in this time, what do we have? It makes us and it helps us create a bullish breaker. So I'm gonna show you that now. This is a high, this is a low, and this is a lower low. So that is what a bullish breaker. So this is where I can be comfortable to go long and target the new week opening up. Because now, why am I comfortable? We have left this breakaway gap open on field. That is bullish order flow. So it means we do not have the willingness to trade back and fill this imbalance. This one is still on field. This one institutional order flow entry drill. We just wick into it just a little and we trade higher. So this bullish candle, the last up close candle, or the consecutive up close candles, depending on the price action, is your bullish breaker. Usually, I don't always have this mapped out drawn like this. I just prefer to use this um alphabet, and I will just realize or know where my breaker is because I do not like too much lines on my charts. But to give you a proper visual representation, I have to do this. So now we have this breaker after the macro. I can actually trade inside the macro, but I prefer not to sometimes. So what has the macro done here? The macro has taken out sell side, taken out buy side, then comes and trade into this breaker. Then you can buy at the touch of the breaker, either at the top of the week or at the close of the candle, depending on what you want. But just to be safe, and since the week is not that long, just buy at the top of the week so you don't get to miss out on the trade. So you do that, your stop is going to be just below the breaker. So you're going to have something like this. This is going to be your stop, something like this. And you target for here, or normally I would target for the main threshold, but definitely take partials along the way. And if we get that, it delivers like gangbusters. So on this case, you see how slow and lethargic it gets to deliver, but eventually it does that here and on the same day. But it's just gonna be one of those days where the market is just long and stuff. But you see, I don't think there was a time that you'll be in this trade and you get stopped out. You would eventually get, because we didn't get any crazy stop run. We didn't get any crazy run on stop. There's no way I'm gonna be putting my, if we are here, there's no way I'm gonna be putting my stop loss, using my stop loss here. So there is no crazy run on stop here. There isn't crazy any crazy run on stop. You can use your free projections and take partials along the way, because there really is nothing to use in for partial taking, for profit taking anywhere around here. So what you can do now is you can pull your fib from here to here for free projections, and you just go free projections. So first partial can be here, negative one standard deviation, then you can hold to here, or even here, because now you have seen a better target. So this is the benefit of using um few projections. And you can see we still got that delivered today. We got that delivered today. So without me, let me show you. I want to show you the precision in this. Okay. So now I just put on the extended lines. So you see, did you see how we got that? So this was negative 2 standard deviation. So these are ways whereby you can actually take profits, and this is how I backtest anyways. So guys, that would be it for this stuff. I hope it was insightful. I hope you had something to learn at least. I will still do, trust me, I'm still gonna do a very, very much more in-depth market review. This is just for now, and I hope you guys liked this and enjoyed it. It's about the rain, and I don't want the rain to disturb the video any longer. I'm glad, well, we're already done with how this day went, and I hope to catch up with you guys soon. Be safe.